And one final question, going back to the Parliamentary Secretary, to the Finance Minister. I would like for you to comment just how important it is for our government to ensure that we have a sound and stable housing market.
Thank you. Well, first and foremost, when these policies or these changes were brought forward, they were brought forward because we want to really help support a healthy and stable competitive housing market within our society, and also to make sure that our economy is stable as well. We have put measures in place to protect borrowers because we recognize that there's a high level of debt, and we truly just want to make sure that we're here to protect Canadians. That's what it's all about. It's about protecting Canadians and making sure that they have a stable debt load.
Thank you.
Francisco, Mr. Albas.
Thank you, Mr. Chair. I just want to thank the Parliamentary Secretary and the officials for coming today. Certainly, I've been in your seat before working as a Parliamentary Secretary and carrying water for my minister, and obviously you weren't there for these changes. And also, so I can't hold you accountable for it, but I can hold you accountable for what you've said. So the President of the CMHC just said that the changes that were brought in October 3rd were not in response because of Toronto and Vancouver's housing markets. You, in your opening statements, have said otherwise. Who's right?
My comments with respect to this is that I can tell you that we have seen that the situation was acute in Toronto and in Vancouver. However, the borrower vulnerability is not just in Vancouver and in Toronto. The borrower vulnerability is all across Canada from coast to coast to coast. Those markets were hot, yes. However, it's the borrower vulnerability that we're very concerned about, and that's why these policies and these changes were put in place.
The President just said completely otherwise, that the changes were not made because of those exclusives. But we'll move on.
Mr. Albas.
Thank you, Mr. Chair. Thank you to our guests for being here today. Certainly appreciate you coming and giving the committee a little bit of a better understanding of your opinion. Now, some of the best advice I ever received was to think of people, not for them. And when I read this, sir, it sounds like your agency is thinking for people. Action was needed to address the level of household indebtedness in Canada, which is now a historic high of 167%. Now, that may be, that is probably true, but it doesn't necessarily address housing debt. We've had witnesses after witness come and say that when someone can get into the market, and I'll just bear in mind that many people, the baby boom generation, came in at double-digit interest rates, and they did so because they felt, A, a home gives them a place for their family, for safety. Second, it allows them to put away money into a forced savings, so to speak, and allows them to have the privilege of home ownership, which I think is important. And I think what you're doing here with your comments, sir, is you're somewhat construing the situation to sound like it is all mortgage debt that is causing the problem, when we've heard very clearly that access to credit card debt, access to financing loans for for cars or for other non-durable goods, unlike a home, I think is an issue. So when you say highly indebted borrowers are likely to be younger first-time home buyers, are you not also saying that when people finally get into market, they're going to be older and they're going to be kept out of the market for longer? I'm just trying to get a sense of where you're going with this.
So in Canada, we have among the highest home ownership rates in the world at about 69%. And indeed, as you suggest, home ownership is well correlated with various social outcomes, including forced savings, retirement wealth, etc. We took as quite instructive the research being done by the Bank of Canada that the number of people who had very high credit scores that were entering the housing market had grown from 4% of people who were indebted to 8%. First-time homebuyers in particular tend to be substantially, I think it's 90% plus mortgage debt as opposed to other sources of debt, because they're quite stressed. And so we were concerned about their ability to afford their homes. And I don't think we were thinking for them with respect. I think we were very much thinking of them.
I would disagree, simply because when someone is young and most of the time they have some education debt that they have to pay off for school, but then they usually, when they're buying a home, it's usually because they're on a path, they may get a promotion, etc. And also, I will say, like the baby boom generation, they got into the market knowing what the risks were and made sure that they could make those payments even when they were dealing with double-digit interest rate. I think, again, the policy somewhat smacks of the nanny state. Now, what evidence does CMHC have that supports your contention that portfolio insurance has distortionary effects which are stimulating excess credit and contributing to higher levels of household debt?
There were a number of business models that were substantially based on, for example, refinancing, and I gather some testimony has referred to refinancing as something that has been lost. I just want to distinguish between renewal and refinancing. So if an individual comes to the end of their mortgage term and seeks to renew, they can still do that. That's freely within the programs that we have in homeowner transactional and portfolio insurance. Refinancing is where somebody goes to a bank and wants to borrow money and increase their amount of indebtedness out of their home. And our contention is that's not a housing need, which we think CMHC exists to provide. That is a housing want, and that can be provided and still is freely available in the public markets. But to the extent there's government support for it, that didn't strike us as something that the government should be supporting.
Oftentimes when someone's need to renew, they're at the end of 5 years and they often have the equity already to be able to pass because they've hit that 5-year period. But again, part of refinancing allows for people to be able to invest in their small business. It allows them in some cases to survive a lockout or a strike. It sometimes will allow them to be able to purchase a home from a spouse because of a divorce. So I just think it's a little bit short-sighted for us to look at those. And what evidence of risk was present to eliminate portfolio insurance on refinance and rentals when there was a delinquency factor of 0.24% in the current portfolio?
So the evidence is in economic crises throughout history. Of the 46 financial crises for which we have data, the overwhelming majority of those, 70%, were preceded by housing boom and bust cycles. There's a book called House of Debt by Atif Mian and Amir Sufi, and they say it is as close to as definitive a relationship as exists in macroeconomics. We were jeopardizing the economic future of Canada by promoting an economic cycle in housing markets that could result in a crash and that could result in unemployment for people.
So you're quoting from a book's model, an economic model, as your evidence.
You asked me for evidence, sir.
Well, no, well, sir, we just had the financial crisis of 2007-2008 in the post-recession. We have Alberta, for example. Alberta has been weathering a significant economic downturn, and that is without a housing collapse. So what do you say when you're faced with the actual practical situation that we just had a major stress test in 2007-2008, and we have continued to see a weathering where Albertans are doing what it takes to be able to keep their homes?
We don't believe we've been tested in our system in Canada. I wouldn't suggest that the financial crisis as applied in Canada was a true stress test. We publish stress tests that are far more aggressive than that, and with respect to oil price declines, far uglier than we've experienced recently in Alberta. I would suggest that a single-digit decline in house prices is not a crisis.
Well, I would simply point out, sir, that when you have the shock going through the system of the international finance system and people aren't sure about what anything's going to be worth, that is a stress test versus a orderly raise. People know interest rates eventually will go up, and they will make allowance for that. So I would just simply point out the practical models that we've seen and the behaviors of our moderating institutions here in Canada shows that the market was quite capable and resilient, and it was due to continued efforts to make sure that the market itself priced risk.
Mr. Lippert, 5 minutes.
Mr. Siddall, thank you for coming today. I must say that I cannot believe that we had about 12 hours of witnesses here, people who are in the field, people who are experiencing this every day, and you come here with a statement that basically says they don't know what they're talking about. I'm sitting here in Ottawa and I know better than they do. I don't think I've ever seen a more arrogant presentation in my life. And so I think maybe you might want to take a minute and just step back and say, some of these people who are experiencing these issues every day might know something about what's going on here. You say it could happen, if it happened. And based on reading a book, I'm appalled. We have a situation in Alberta where we've gone through 2 years of job losses unprecedented in this country, and foreclosures have barely changed. So how do you justify what you recommended to the minister based on exactly what's been happening in Alberta for the last 2 years?
First of all, I apologize if I come across as arrogant. That's not at all my intention. We have people working in all provinces of this country, including Alberta, and we listen to our colleagues in all of the entities and all of the stakeholders who testified to you. Some of them are our clients, in fact. Some of them are our competitors, and we listen quite intently to them. I misspoke if you thought our conclusions came merely from a book. I was citing that as a particular piece of evidence for being concerned about the future, and I would reiterate that concern. And I must say that the problem that we worry about the most, sir, is unemployment. That is absolutely the single creator of somebody losing their home. That's the single risk we face. And economists talk about negative demand externalities. People in Canada will determinedly pay their home. So the fact that our arrears rates are very low is actually worrisome in the sense that someone will save their home by not buying a car, by not buying a fridge, by economizing on their groceries. That's our experience in Canada. And what that does is it reduces consumption. And when we reduce consumption, we reduce economic activity. And when we reduce economic activity, someone loses their job. And that is what we're concerned about.
What we've been told by people who deal with clients on a daily basis is that what you have done is you've done the exact reverse. People who were about to qualify, first-time home buyers for a mortgage, could not qualify under these new rules, so they've gone out and taken their dollars and spent it on vacation or on a car. What would be your comment to that?
I haven't seen those data, sir.
Well, read the testimony then that came before us.
I've seen the testimony.
Times.
I can't distinguish between opinion and facts, so I haven't seen the data.
Well, you're going by opinion, you're not going by facts. You've got no facts to justify what you did. You are going simply on the basis that something could happen, so we're going to take this action now. That's hardly data, sir.
With respect, I disagree. Our housing market assessment is based on models which are based on historical data. And our stress test is based on projections of our own insurance outlook. Those are data, sir. Those are not opinions.
Well, that isn't what we've heard for 12 hours of testimony before us here, and I'm extremely disappointed that someone like you is making those kinds of recommendations to the finance minister based on what we've seen here today.